Welcome back, investors, to Ticker Time News. I'm Adam, and Roblox, ticker symbol RBLX, is under heavy selling pressure, losing 25.5% of its value in just the last week alone, after the company's Q4 and January metrics signaled a slowdown in growth. The online virtual world-building game, most popular among kids and teens, is now facing elevated competition for its users' time. As school is back in session, after school sports programs have returned and mobility has increased. This fierce competition shows most plainly in hours engaged, which fell 4% quarter over quarter in Q4. And to add to the pain, average bookings per daily active user, or ABDAUs, which measures the revenue Roblox receives per user, actually declined 22 to 23% year over year for January. Okay, before we get too far into Roblox disappointing earnings, smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. When trading at high multiples like Roblox does, massive swings in stock price can happen in response to good earnings or even bad earnings. For example, after DAUs rose quarter over quarter in Q3, despite the uptick in mobility, Roblox shares soared by over 30%. Meanwhile, now that Q4 results are possibly pointing to signs of trouble ahead for Roblox, investors are selling out of the stock like it's the plague. Now, not all metrics disappointed in Q4. For example, the company's bookings still grew by 20% year over year to $770.1 million. Also, average DAUs jumped 33% year over year and 5% quarter over quarter. January DAUs saw an equally sized year over year increase of 32%. Also, January DAUs of 54.7 million represented a solid bump of 10.5% for Q4. Moreover, Q4 tends to be a relatively slow quarter, mainly due to students returning to school. Roblox noted that activity does not typically pick up until around December. The rise in DAUs for January shows that Roblox is still retaining and growing its user base. However, these positive results were insignificant to offset the sting of multiple rough patches. Along with the already mentioned quarter over quarter drop in hours engaged in Q4 and a considerable dive in January ABDAUs, bookings were also up just 2 to 3% year over year in January. Out of each month over the past year for which Roblox provided metrics, January's mild growth is the slowest growth by far, pushing concerns that Roblox may be experiencing a normalized level of post-pandemic engagement. Overall, Q4 results coupled with January metrics are a worrisome indicator that Roblox may not sustain that tremendous growth it experienced during the height of the pandemic going forward. Other video game publishers like Take-Two and EA are not trading down much more than the overall markets on Roblox weak results, indicating that Roblox slowing growth may be more of an issue with its game and not with the gaming industry in general. Bottom line, with difficult comparisons plaguing Roblox for the next few quarters, it could face additional selling pressure. For that reason, I think it's best to employ a wait and see attitude towards Roblox. Well, that's what I think about Roblox right now. But I want to hear from you. Do you think that this report puts a damper on Roblox's metaverse plans? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research so you don't have to. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.